Alright, so today's the 28th of September. It is a Thursday, and we are doing a breakdown of the trade that we took today on gold against the US dollar. So, on the higher time frames, we have multiple lower highs being formed on gold, and then a bit of a consolidation of higher lows. So, that all got broken. And then on another chart, I have a key level at 1890, and then I have another one at 1860. So since gold didn't have any problem with 1890 yesterday, my next target is 1860, and then the mid range is actually 1875. So for today, I was just looking to target 1860. Wasn't sure if it would pull all the way down into these blue areas today, maybe on Friday. So going down in today, let's let the Asia session play out. Alright, grand. So usually when I'm day trading, I'm usually scalping. So I'm looking at the 5 minute, the 1 minute, unless I can position myself in a higher time frame to potentially be at a top or a bottom, and then I'll swing the trade. But since this is kind of in no man's land, it's in the middle, I won't be looking to hold this trade. That's why I'm looking to get out 1860. So straight away we can see price respecting previous day highs and also the Asia high, slightly taking it out. It's got some bullish momentum. We can see that the Asia low is being respected. So again, we have a push up, so all we can see is basically just a consolidation. So I'm usually waiting to take a trade around the start of New York at some point to then continue for the rest of New York. Yep, so still nothing happening. So it's like watching paint dry. Alright, so bang. We have our New York Open. So straight away, this New York Open has come up to this previous London high. That printed lower than this one, so we could be looking bearish. Could have people looking towards the downside here. Maybe looking to take out this liquidity over here and trying to get in sells. But unfortunately, yep, they are stopped out. So, just going back quickly. So dropping down to the 1 minute, because I'm looking to get my entry around the time of news so I can trade with volume. So what happens is we have our 1 o'clock open with New York, which is a push up, taking out this liquidity, tapping into this London high over here, and then pushing down. And then it's coming up to 130. So bang, 130, we've got our news coming out, and then we're going to see how the market reacts to it. And then bang. So straight away, can see when this is happening, market's pushed down, taking out this low, and then it's pushed up higher. Next candle pushing up higher, and then bang. So that's even taking out the previous session high all the way back over here. So that results in this. So when I saw this, and it was a clear break out of the structure, so this was a very risky trade, but essentially I've entered with my stop literally on the high, and then TP all the way down at 1860. I basically just had an open take profit, and then bang. So the main thing to note about this is the slowdown of price, but when we got up here, so usually there's like a two-legged pullback. So I'd like to see price essentially, it's about its behavior of how it goes into somewhere. So because it essentially has gone up then down like this, and then pushed it up and then sold off, that's what I was expecting to see, and that's what happened. So once I've seen price then come down, take out these Asia lows, still waiting on price. So bang, since it's taken out those Asia lows over there, we are looking for a re-entry to take this potentially lower. So my problem was when I looked for a re-entry, I actually did end up entering over here for another short position with a TP just over here, and I did neglect the fact that there is a very, very big fair value gap being printed over here. So as I wasn't watching, because I had my trades at break even after entering them, just because I'm confident in the direction the price is going currently, instead kind of found support over here, and then I've seen price push back up, and then eventually what's happened is I've become an inducement for price to come back up, wick into this area, take out the stops that are going to be above this high over here, and then continue the trade on down. So a key point I'd like to note about this is that, so I did lose this trade because I didn't see this fair value gap re-entry, and that's alright. If you guys been looking at anything to do with ICT, you'll know about these fair value gaps. But the thing to note is that I waited for the manipulation of this consolidation that was formed during Asia and London, and then smash take profit and it's pulled back. So I hope this was useful to anyone who ends up watching it. And yeah, that is the Thursday 28th trade that we took today on gold, and that was about 200 pips, just under 200 pips, something like 190 pips. So yeah, not bad.